Hey guys, Credible Crypto here with a new YouTube video update for you guys. For those who are not aware, I did actually put out a YouTube video about the recent market crash that we saw across the board. The most devastating and most significant liquidation event in the history of crypto. Liquidations around 10 times more than the FTX collapse, which was the last big event that many of you probably remember. If you guys were affected by these liquidations, I do recommend watching that video. I know a lot of people took a lot of big hits, myself included. Morale has been pretty low the last couple of days because of this. I do recommend watching that video and sharing it with friends if you haven't already. It puts things into perspective for those of you who did take hits like myself, and I do recommend checking that out. It's still relevant, of course. It was just put out 24 to 48 hours ago. In that video, I did mention that I wanted to cover a number of altcoins following this massive liquidation crash, but in that video, I didn't cover them because the video itself was about an hour to an hour and a half long, and so I figured I'd make another video to cover actual technical analysis across a number of altcoins that I personally hold and that I know a lot of you guys hold. And so this video is going to be specifically a market update on those altcoins, including Bitcoin, of course. And I think you guys are going to enjoy this one. I do have a lot to cover, and we're going to be looking at this from all kinds of different angles, from different pairings, including USD pairings, Bitcoin pairings. We're going to cover Bitcoin, Ethereum, CRV, XRP, HBAR, TRAC. These are coins that I have been extensively covering, not just for the last few months, but for the last few years. I hold all of them in my spot portfolio, and these are some of my highest conviction plays for this cycle. So we're going to cover everything, guys. Without further ado, let's go ahead and jump right into it. So we're going to start off with Bitcoin, obviously, because as we know, Bitcoin kind of sets the tone for the rest of the market. And one thing I want to emphasize here, guys, I touched on Bitcoin a little bit in my last YouTube video, but one thing I want to emphasize here is that Bitcoin overall looks very, very healthy on the high time frames. As previously mentioned, we did see a liquidation wick the other day, and on some exchanges, it went lower than on others. Of course, this is Coinbase, and we only went down to about $107,000 here. On Binance, we wicked into the next area of interest down here at $102,000. But either way, overall, the chart looks very, very healthy, okay? And I do believe, as I mentioned in the last YouTube video, that in general, these types of events that we see, these massive liquidation events, are typically bottom-forming events. For the case of Bitcoin specifically, I do think that we can revisit these lows at 107K. We're not ruling that out. Why? Because, of course, Bitcoin didn't see the type of liquidations that we saw on many alts. And for those who are unaware about exactly what caused that, you can watch my last YouTube video. I will also recommend checking out this recent article that was just published by another user here on X. And I've highlighted that article as well. It actually gives us a lot of insight and further confirms some ideas that were floating around the space about what caused the massive liquidations that we saw. Give that article a quick read as well as watch my last YouTube video for some more context. Anyways, for Bitcoin, guys, again, I think the high time frame looks fantastic. There's not much to be concerned about here, as I mentioned in my last YouTube video. Because of the big wick that we got on different exchanges, the lower time frame PA is now a little bit unreliable because it depends on what exchange you're looking at. So the Tether pairing, as you can see, we wicked down to 101K, 102K. Some of the other pairings only wicked down to 106K, 107K. All this to say that our lower time frame ideas on Bitcoin, they're a bit unreliable now. What I mean by that is, of course, we had two scenarios that I covered in my last YouTube video. Scenario 2 that had invalidation at 105K, and then scenario 3 that was the higher time frame idea with invalidation down here at 74K. And scenario 2, depending on what exchange you're looking at, may or may not have been invalidated with the recent wick. Because of that, it's a little bit ambiguous on the lower time frames. But that doesn't change the higher time frame idea, which is that Bitcoin remains in a very solid high time frame uptrend, and that will not change unless 74K is breached. And as I've said many times now, I don't expect that to happen. Even with yesterday's or the day before yesterday's massive liquidation event, Bitcoin barely went down to 102K, could not even break under 100K. On some exchanges, didn't even break 105K. And so this is kind of a testament to the strength of Bitcoin right now. And I really don't think we have anything to worry about on higher timeframes. So with that in mind, on the lower timeframes, I'm simply waiting for some more PA to develop here. Like I mentioned in my last YouTube video, because of this giant wick that kind of makes the lower timeframes a bit ambiguous, what I'm waiting for now is to see if we can print another lower timeframe impulse off of these levels here. And if we can do that, that's a really good sign. From a pure PA perspective, and ignoring Elliott wave for a second here, this zone here at around 120K is what we want to see cleared. Why is that? Because it's the point where we last broke down from. This is a logical place where we'd expect sellers to step in if we are going to see a rejection as we move up. And clearing this level tells us the most likely place for a rejection on the lower timeframes has now been cleared, meaning where we'd expect sellers to step in. If we clear this zone, it means that they have not stepped in, and that means we're likely headed to new all-time highs and a continuation of our uptrend to 150K plus. So the relevant zone here on Bitcoin specifically is going to be this red zone here between 120 to 123. Once we clear that zone, I think we'll probably accelerate to the upside fairly quickly. And on lower time frame, this can play out in a number of ways. We could pop up here, we could reject and come back down. We could reject and kind of consolidate here and chop around a bit and then break out. There's a number of ways that this PA can develop, and I'm really not sure what we're going to get. So we're simply going to wait and let time tell us or help us identify when we may be ready for the next movement by looking at developing price action, which will again either be the form of some sort of a tightening consolidation here, or potentially if we do reject or come down back to our lows at 102K, we may see a bit of a base formation here that we'd like to talk about, maybe some sort of a larger range forming here, a deviation below, and then a pop back up and maybe a reclaim, and then maybe some expansion to the upside. Again, this can play out in a number of ways. And again, it doesn't really matter what happens here in the lower time frames as long as we stay above 74K on the higher time frames. And I certainly expect that we will at this point in time. So it's just a matter of watching to see this lower time frame price action develop. With that being said, guys, let us now go ahead and move on to Ethereum. All right, guys, so Ethereum actually held up like incredibly freaking well over the last 24 to 48 hours. So I actually went ahead and bought some Ethereum in one of my retirement accounts on Friday before the traditional markets closed at around this level here, around 41.32, kind of a spot holding. And it's funny because we saw this massive liquidation event over the weekend. Ethereum wicked into this zone here, which we'll talk about here in a second. But price then bounced back up. And by the time traditional markets opened on Monday, my position that I bought on Friday was actually in profit, despite us having seen this massive liquidation event over the weekend. So funny enough, Ethereum actually held up very, very well through that event. And so did Bitcoin. Most other alts, and I've talked about this in the last YouTube video I made, so go ahead and watch that if you want more context. Most other alts got absolutely, completely obliterated. Again, the worst liquidation event we've seen in the history of this space. It was absolutely brutal. Top 10 coins by market cap, including Doge and XRP, both fell over 50% in a matter of minutes. Completely unprecedented. In any case, guys, the point that I'm trying to make is that Ethereum held up really well through all this, right? If we go ahead and actually look, I tweeted about Ethereum on Friday before the traditional markets closed, when Ethereum was trading at right about 4,100. All right, so here's the tweet. And of course, this tweet was right before the massive liquidation event that we saw. And in this tweet, I basically said, we're here at our range lows. Again, this is based on an idea I shared earlier, saying that I believe that we are headed back down to these range lows. An even earlier idea where as we were rising, I said it would be nice to see us return to this orange zone here, and that would give us a nice setup for a move to these range highs. And then you can see that idea actually developed very, very nicely over time. We ended up peaking shortly after that idea was tweeted, started coming down. Again, I said I'm targeting this zone here. And then shortly after that, we ended up hitting, as you guys can see, we ended up hitting that zone. Now, again, this was right before the massive liquidation event. And I did say that at this time, Bitcoin is also a hair away from our high time frame buy zone. Confluence like this is a good sign. I won't rule out a wick into the blue zone down here on Ethereum, which is a key level within our higher time frame area of demand, which is this larger green zone, if Bitcoin pushes deeper into its own high time frame zone. Either way, I think our bottom is close and it's time to focus on potential longs / spot DCA buys in anticipation of the next leg up to 5,000 plus. Shortly after this tweet, we saw the most brutal liquidation event in crypto history. And so Ethereum did end up wicking down into the blue zone, as we said was a possibility here. Bitcoin also pushed into the high time frame buy zone, which was 108K and above. And of course, as we saw in some exchanges, we wicked below that 108K zone. But Ethereum did wick into our blue zone here. And if we look at our chart today, we can see that we did wick into it and we saw a beautiful bounce off of it back up inside of our range. So Ethereum actually held up really, really well, held our higher time frame area of demand, which is the green zone, wicked off of the lower time frame area of interest within the higher time frame zone, and popped right back up to our local range. Ethereum looks quite strong here, and I want to talk about Ethereum in context of the higher time frames here. I recently pointed out, or not too long ago pointed out on my Twitter, that we did have a very clean 5-way move here. And this is one of the cleanest impulsive movements I've seen on Ethereum in a long time, I should say, because Ethereum up until now has been doing this choppy grind over the last number of years, really. Even this move here was not that impulsive. This move looked somewhat impulsive, but this was really just a lot of chop. And so for a long time now, this was back in 2023, I've been struggling to identify a clearly impulsive move on Ethereum, which is strange because, as we know, Bitcoin showed very clear impulsive movement on its own starting from 15K, whereas Ethereum kind of struggled here with that impulsive price action. It wasn't until this move here that we really got the first taste of what impulsive movement should look like on a strong trending asset. This is exactly the type of price action we want to see. Not only do we have a very clear 5-wave move, which is a series of higher highs and higher lows on this applicable time frame, but even within this third wave here, we had a nice breakdown even within this third wave here. So the subwaves within this larger 5-wave move were also nice to see. Subwave 1 here, then a subwave 2, and then a 1, 2, 3, 4, 5 for the third subwave, subwave 4, and then the fifth. So the subwaves within this third wave were really nice, and we always look for that to kind of help us identify when you have a clear 5-wave move. And then again, even on the fifth wave here, we got a very clear, again, 5-wave move within this larger fifth wave as well. And again, that subwave, the clear subdivisions of the subwaves is what helps us identify and validate an impulsive move. And so this move very, very clearly impulsive, right? By this idea, I said, Ethereum looks very bullish. We may get a pullback into our high time frame demand, which is this green zone here. But ultimately, I don't expect that we're going to see sub 2000 again. The bottom was in here at the start of this impulsive move, and now we're getting a pullback before expansion to the upside. And in my opinion, as I've said for a long time now, ultimately to a cycle end target of $10,000 plus. Now, with that being said, there is a question about the price action that we saw on Ethereum leading up to this impulse, which is this structure right here. And I think that there are multiple possibilities here, and I'm not super confident in one way or the other at the moment. And that's why I'm going to discuss these two specific scenarios with you on Ethereum to talk about what I expect to see in the coming weeks, okay? Two scenarios, only two main scenarios that I see, two possibilities here. Both are viable, both make sense, and the ambiguity of this initial move is what makes me consider both of these scenarios technically valid, okay? So we're going to talk about scenario one. And in scenario one, the origin of the impulse on Ethereum at $2,000, which is the 5-wave move that you see here denoted by these blue numbers, this was the origin of a new, fresh 5-wave impulsive move that should take us to 10K plus, okay? This is the start of it, meaning if I were to zoom out a little bit, okay, this would be the first major wave of 5 to the upside, okay? And the current move obviously is our wave 2. By this logic, the current correction that we're seeing when it does complete would then lead to another major expansion of the upside. And if our first wave went from $2,000 to $4,700, which is a $2,700 move, this next leg up when it begins would be multiples of that. I would imagine anywhere from $5,000 to $6,000 to the upside. So assuming that our bottom was put in here at $3,400, the next move would take us potentially to $8,000 to $9,000. It would be a very aggressive move to the upside, okay, when this impulsive move begins. Now, keep in mind, this move only begins when this subwave 2 ends, okay? And again, we know that a subwave 2 or a corrective structure can take many shapes and forms, and it can even go and clear the previous highs, come back down, chop around for a while before the impulsive move begins, all right? And again, what that looks like is a corrective move to the upside that does clear these highs, but that doesn't necessarily kick off that next $5,000 move. We then maybe correct back down into this area, this what will be a new area of demand at that point, and we form what we like to call a running flat. In non-Elliott wave terms, all this would be a break of the range highs, a retest of the range, the mid-range potentially, and then expansion, okay? So this expansion that we talk about, that is this third wave. But we don't know yet when this second wave will end. Will it continue to do something like this? Will we continue to chop around here for a bit longer before impulsing? And the only way that we'll know that this major third wave has started in this scenario is when we see lower time frame impulsive movement like we saw here, and ideally with clear 5-wave subdivisions. That increases our confidence that a lower time frame impulse move has begun, right? And when we see a clear 5-wave subdivision move to the upside, we then understand that this is possibly the start of the next major leg to the upside, which should be, again, a $5,000 to $6,000 move to the upside, okay? So this is scenario one. Again, scenario one assumes that this was the first big move to the upside of 5, and we're currently working on correcting it before the next major move to the upside, which will be the third subwave of a much larger 5-wave move to the upside. This is scenario one, okay? Now let's talk about the alternate. Scenario two, we'll call this, okay? Scenario two takes this initial move off the lows into account. And one thing that I will say is I've been doing this for about 7 to 8 years. And in that time, I've been, again, specifically focused on the crypto markets and with an emphasis on Elliott wave analysis. And I have seen time and time again, and I've learned, maybe not in other markets, but in crypto specifically, a lot of times we get impulsive price action or impulsive movement that doesn't necessarily start off of a major macro low. And the reason for this is that because sometimes we get corrective moves up off of the lows, and if bullish momentum is strong enough, then before we can correct back down to make a lower low, that move truncates, meaning falls short of the lower lows, and we actually impulse off of midair. And so I've seen this happen before, which is why I don't discount it or count it out. And it's also why I don't assume that the move off the lows has to be part of a 5-wave impulsive segment. A lot of people will make this assumption that wherever we saw the low, that must be the start of a larger 5-wave move. Again, I don't agree with that because I've seen enough times in our history, and I've shared them on my YouTube as well over the last 5 to 7 years, instances where we've seen impulses and 5-wave moves not start off the bottom, but start off the somewhere above the absolute bottom, right? But let's go ahead and talk about scenario 2. Scenario 2 assumes that instead of our massive 5-wave move starting off of $2,000, we actually have a 5-wave move that started off of $1,300. And in this case, our first impulse would be this leg here. This would be our wave 2. This would be our 3rd wave. This would be our 4th wave. And we're missing a 5th wave here to complete a 5-wave segment before a larger corrective structure or a larger pullback. And then we get that major 3rd wave to the upside, okay? In this scenario, what we might see happen is price make new all-time highs, push above 5K, and instead of then kicking off a move to $10,000, instead we may see price struggle here a bit, complete a 5-wave move to the upside, and then we may see a larger correction again. We may see more sideways movement, basically a stalling of price here as we get the real major wave 2 before again our next impulsive expansion to the upside begins. So this is scenario 2. And as you can obviously see from the 2 scenarios that we've laid out, scenario 2 is actually a little less bullish because it implies that we've already completed our strong 3rd wave here. We've already completed 2 of the 3 impulsive moves of this leg, and we have 1 left before a larger correction takes place. And typically the larger corrections, because they're corrections of a larger degree, because they're correcting the entire move off of 1300 to wherever this 5th wave ends, typically they tend to be longer than these smaller subwave corrections that we've seen leading up to them. So that could imply a corrective depth that's greater than, in this case, greater than 30%. It can imply a corrective move that takes longer than about 53 days, which is how long this one took. Those are the implications, okay, for scenario 2, which is again a little bit less bullish. Remember, scenario 1 assumes that we've completed only 1 leg of 5, and this is the more bullish scenario because it also implies that this $2,700 leg off the lows is really just the start of a much larger move versus scenario 2, which implies that we are working on possibly the last subwave correction before a smaller 5th wave here, and then a much larger or time-consuming or lengthier or deeper correction before the real aggressive expansion at $10,000 plus occurs. So those are the 2 scenarios that I see here on Ethereum. Frankly, I'm not sure which one we are working on at the moment, and I think the next leg up when it comes will give us more insight into that. A couple of things you want to note. There are certain levels of invalidation here. I don't think they will be met, so they probably don't make much of a difference, but just for context's sake, if we somehow continue to correct from where we are now down to around 27, 2800, again, I think this is very unlikely, but just to explain to you guys where invalidations do lie, if we move down to around 2700-ish, it eliminates and invalidates this idea, this scenario 2 idea, because we know that in Elliott wave, wave 4, this 4th subwave should not enter wave 1 territory, and wave 1 ends at 2800. So if we hit 2800, scenario 2 is out of the question, and what we're really seeing is our scenario 1, which is again the more bullish of the 2, and that actually makes for an excellent risk reward long entry as well at 2700. So that is the difference between our scenarios 1 and our scenarios 2. They're both viable, and again, as more price action develops, specifically with this next leg to the upside, we should get more insight into which scenario we are seeing play out. So I'm going to go ahead and map off these 2 scenarios here so that you guys can see that in both scenarios, what we do have is at least 1 more leg to the upside, right? And then depending on how price action moves to the upside here, we may be able to get more clues as to whether or not this is our scenario 1 playing out, which is again the blue scenario that you see here, or if it is our scenario 2 playing out, which is, of course, the green scenario that you see here. Of course, if we move down to 2750 before the next leg up, then we automatically know which scenario is playing out. If, however, we do form a reversal off of these local lows or somewhere close to these local lows and we start moving up, we'll need to watch to see how this next leg up back above $5,000 plays out to determine if we're then going to get more chop, consolidation, and correction, or if it's going to be the start of something much more explosive to the upside sooner rather than later. In both cases, however, sub 2,000 is out of the picture, even more so in the blue scenario, the more aggressive scenario, because that confirms that this was the origin of the larger move, which means we are no longer allowed to revisit below this level. So $2,000 is 100% out of the question in that case. In the green scenario, which is scenario 2, technically, the wave 2 that follows this move technically could come back down again to anything above this. This would then become the origin in scenario 2. And so technically we could correct back down to sub 2K, but even in scenario 2, something like this is unrealistic to happen. So for all intents and purposes, sub $2,000 Ethereum is likely gone for the rest of the cycle. And now we're just trying to figure out if the explosive move to the upside to 10,000 plus will be starting sooner or a little bit later. Sooner being, again, our scenario 1, a little bit later being our scenario 2. So moving on now, or I guess continuing on to the Ethereum Bitcoin chart, this is what I'll be watching to kind of get a little bit more insight into which of these two scenarios we're seeing playing out. Of course, the first thing I'll be watching is on lower time frames, the move up, whether or not we get a nice clean 5-wave move to the upside. That'll be important. And then the other thing that I'll be watching as well is I'll be looking at the Ethereum Bitcoin pairing for some further confluence. So let's go ahead and move on to the Ethereum Bitcoin pairing. On the Ethereum Bitcoin pairing as well, there's a similar structure here. As you can see, we have this very clean 5-wave move to the upside. And again, this could be the origin down here at 0.02 of the larger 5-wave move. Or again, this could be the start of the larger 5-wave move down here. Just like the USD pairings, there's multiple possibilities here. But what I really want to draw your attention to is that on the Ethereum Bitcoin pairing, at least in the lower time frames, we've hit this very significant area of demand or support where we're now seeing a bounce off of. And I'd like to think that we do bottom within this green zone here. So either the bottom is already in, or if we are going to come back down, I would like to think that we may just form a higher low here and then continue up. And the reason that I say that is because if we do zoom out to the even higher time frames, what we will see here is that we do have an untapped area of supply, or you can call it an area of resistance above us that has not yet been tested. And I would like to see this zone tested, ideally, before a deeper pullback, if we get one. What we have here with Ethereum Bitcoin is we have potentially 3 legs up, or potentially a first leg of 5 to the upside, but we have this untapped area of resistance or supply right above us. And I guess I will say that if anything, this probably supports our scenario 2 that we just discussed, because I can see a move of Ethereum Bitcoin up to this zone. And then once we test this area, again, this is the most likely place for a larger rejection on Ethereum Bitcoin. And so if we do get that larger rejection, that could be the start of our major wave 2 before we ultimately break through this down the road. And again, what that would look like on the USD pairing is our scenario 2, which is our green scenario. In the first scenario, which is the more bullish one, the move up to these highs should not be met with too much resistance, and ultimately we should blast through and continue higher. For something like this to happen, this scenario 1, what that would translate to on this Ethereum Bitcoin chart would be us not rejecting at the red zone, but instead potentially consolidating a bit and ultimately just ripping through without much of a pullback. So again, it kind of depends what we're going to get, but whatever we're going to get, it's going to look identical on both charts. So the scenario 1, the blue scenario on the USD pairing, coincides with us kind of finding a little bit of pause here, but ultimately finding support and then ripping through. Whereas if we get a more significant rejection in the red zone and come back down for a larger correction, that probably is going to most likely coincide with our scenario 2 here. And again, that's a scenario in which we'll complete our move here. We'll make higher highs above 5,000, but then we'll see again a more drawn out correction before the actual really aggressive expansion. So whatever we see, I'll be looking at both pairings. I'll be looking for indications of rejection or exhaustion or a lack of strength, or the opposite. I'll be looking for maybe an initial rejection, but then a lot of strength to kind of help us identify which of these two scenarios we're actually seeing play out here. And so that's why I bought some Ethereum in my retirement accounts, as I just mentioned, because at the very least, I think that odds are decent that we will see, at the very least, again, one more spike up to take these highs. In the most bullish scenario, we continue up from there, but in a more bearish scenario, a rejection there where I can take some profits if I'd like, and then wait to see how price action develops to see if we get a deeper correction where that could ultimately then reload down the road. But yeah, ultimately, I think that Ethereum looks pretty damn good because we held our high time frame area of demand and we didn't lose it. Which of these two scenarios we get will play into some of the later analysis we do on XRP, because as you know, I've been comparing XRP to Ethereum, trying to see which one I think will outperform. And so we'll talk about that once we get to the XRP section of this video. Again, those are the two scenarios that I'm looking at Ethereum. Both are viable, and we'll know more as price action develops. So with that being said, guys, now that we've looked at Ethereum, let's continue on to XRP. And I'm doing XRP after Ethereum specifically because I want to discuss XRP in relation to Ethereum as well. But moving on to XRP, guys, let's take a look first here at XRP USD. And so again, XRP USD, we had that massive wick to the downside. It went as low as $1.36. Actually went down to $1.17 on some exchanges. On other exchanges, it didn't go quite as low. Let's take a look at Coinbase, for example. On Coinbase, it went down to only $1.78. And again, on other exchanges, it went down to $1.17. And again, this is all because of the massive liquidation flush that we had just a couple of days ago. And so this did mess with our lower time frame data a bit, which is why lower time frames are going to be a bit tricky to analyze here. But the point that I do want to emphasize on XRP is that ultimately on the high time frames, once again, it looks fantastic. Okay, looks fantastic. We can ignore again the liquidation wick. I talked about this a bit in my prior YouTube video. Whenever we get something like anomalies like these massive wicks, they can kind of mess up a chart because of the liquidations. And so to kind of help us keep perspective and not get caught up in these inorganic liquidation events, we can switch to a line chart. And you can see here again, the key area that we need to hold at the close is monthly demand on these higher timeframes, and we're currently trading above. So ultimately, this is a very, very healthy chart. Interestingly enough, again, we talked about how in a recent post that I made, a lot of fear and uncertainty and doubt about this structure here that we're seeing, this sort of consolidation structure that looks like it's going to break down. And there was some fear about how this could be marking a potential top. And it was compared to Bitcoin back in 2018 when it broke down from 6K down to 3K, which marked our bear market bottom. But again, I pointed out in a tweet regarding this. So in this tweet, I discussed that sort of setup here, and I talked about how it's important to zoom out and consider context at all times. When we zoom out, this structure is a structure in the orange circle on this high time frame chart. And then I did say that, as I stated in the quote two below, if Bitcoin were to see sub 105K, which again is what we got with this major liquidation flush, that probably means XRP breaks this floor that we're seeing here, breaks this floor for a dip lower. However, this doesn't change the high time frame setup, which remains extremely bullish. I wouldn't call this capitulation per se, but it would be a dip along with everything else, likely below the triple lows at 265 and into high time frame demand at $2 to $2.40. That is around a 10 to 15% drop to the downside, which is what we would see for most coins in the space, not just XRP. And it would likely be one of the first / strongest to bounce back and recover into new all-time highs when the market rebounds. So again, I talked about how if Bitcoin were to break down and see a move below 105K, which we did on some exchanges during this liquidation event, that XRP would also likely break down below 265 and push into our high time frame demand at $2 to $2.40. And of course, we can see that that is essentially what happened. And if we ignore the wick from the massive liquidation event that happened over a number of minutes, we can see that on the 4-hourly chart, we did not get any closes below $2.30. Okay, that is to say that that high time frame area of demand, which again, I showed you guys in this chart, that monthly demand zone here between $2 to $2.40 has essentially held. That is exactly where we broke down into. That is exactly where we found support. Again, ignoring the liquidation wick, no 4-hourly closes below this zone. This area did its job in acting as support. And again, like I said, this breakdown was probably just a shakeout. And so again, we did see exactly what was described in here, and our monthly demand zone did hold exactly as I described. And were it not for the massive liquidation event that we saw, we probably would not have gone much lower than $2.30 to $2.40. So ultimately, my point being that the XRP chart, despite what we saw over the last couple of days in those few minutes of craziness, is that XRP is holding high time frame monthly demand, and the high time frame chart still looks exceptionally bullish. We had some people again comment and say that XRP broke market structure. And again, this is when I pointed out to them that it actually did not, because again, we know that our high time frame impulse on XRP actually began at these lows here, and we had a nice clean 5-wave move. And so the origin of this impulse, the same way that the origin of our clear impulse on Ethereum started at $2,000, the origin of the XRP impulse began at 49 cents, which means that we're technically allowed to correct anywhere above this level, and this is still technically a much larger higher low above the origin of the impulse. And we know that what follows after the impulse completes and the correction that follows it completes is another impulse to the upside. And again, this is what I believe will take us ultimately to double digits. The point being that even if we include the liquidation wick, even if we include this inorganic price action, the lowest that I believe it went on exchanges was around $1.17. It didn't go below $1 anywhere. So even if we include the worst of the worst possibility, we still haven't broken high time frame market structure on XRP, and it still looks absolutely freaking fantastic on the high time frames. And again, no doubt in my mind that what we're seeing here in terms of a correction is simply a mid-cycle correction. This is not the end of the bull run for XRP, and we have much higher to go. With that being said, let's take a look at the XRP BTC chart and the XRP Ethereum chart to keep those into context. They might give us clues about when we're ready to begin the next impulsive movement to the upside. Again, on lower time frames, because of this liquidation wick, it's made the lower time frames a little bit difficult to analyze and interpret, a little bit hard to tell what we're seeing here exactly. But again, we don't necessarily have super clean impulsive price action yet. But again, remember, as we've previously talked about, that impulsive price action can start in midair. So again, we very well could see something like this, just sort of a grind up, a consolidation, and then we could see impulsive price action break out of midair. So we can't count that out yet. But for now, we're just waiting to see how low time frame price action develops after what was the biggest liquidation event in crypto history. Let's go ahead and move on to the XRP BTC chart and take a look at it and see how it ties in to what we're seeing here on the USD chart. Okay, so this is the XRP BTC chart. And again, some of you guys might recall that before a massive liquidation flush, which left this really ugly wick, you can even go down to the hourly chart and you can see that we didn't get any hourly closes below this level here. So this really was very inorganic price action that really shouldn't have happened. Again, if you read the article that I talked about at the beginning of this video, or if you take a look at my last YouTube video, you'll understand why this really should never have happened. It should never have happened, but it did because of reasons that you'll read about in that article and again in my last YouTube video. My point being that we essentially disregard this wick. Again, we didn't get even an hourly close below this level here, so don't pay too much attention to it. What you want to focus on is that we did seem to find some support at this line that says Gandalf's grave. And again, that's a little bit of an inside joke for those of my followers on X. We had a period in time back in June where we were rejecting against this level multiple times. As you can see, a perfect rejection 1, 2, 3, 4, 5, 6 times. And eventually we broke through. I posted a little meme on X that got some attention, a reference to Lord of the Rings. In any case, my point is that this area that was previously a key area of resistance should then act as support on any retest. And you can see that this is where we did find support here on the lower time frames. And you can go to the daily chart and you can see that we did have a daily candle close below, but then 2 days later we've closed back above and we're now trading above this area here. So there's two things that can happen from here. And I think they're both equally valid. We'll have to see what we get. I'm not 100% sure. Depending on how soon XRP is ready to continue the rally that we've seen, we can get one of two scenarios here on the XRP BTC chart. And the first scenario is, again, I talked about this a little bit in my last YouTube video. How do we identify key areas of support or demand on the chart? We look for areas of ranging price action before aggressive upwards expansion. If I were to mark off that area on this chart, that would essentially be this region right here, okay? And it's where we previously established a floor. We traded above it for quite some time. We dipped below that floor. We consolidated and we erupted back above it. So this floor is kind of a very significant area of support on this XRP BTC chart. And we can actually see, of course, that our wick ended up finding balance in that area already. We wicked into it and we reversed. Proof kind of that this is a very significant area of interest on the downside, okay? Now, XRP, as you can see, has all these untapped highs that we left behind before this breakdown. Again, two scenarios that I can see playing out here, okay? The first, believe it or not, I'd actually prefer this, even though I think many of you may not, is that we are not quite done with this correction. We may be done with it in terms of price, meaning XRP likely did see our bottom. Of course, on the wick, I've talked about why we won't see these levels again, but this essentially may have been the bottom of the organic price action at $1.90. That's probably as low as we're going to get on XRP in USD terms. But we know, as we can see from this chart, that a correction doesn't necessarily end with a bottom in price. It can also take time and simply go sideways for a period of time before we're ready for the next actual impulsive movement or actual expansion to the upside. And so in that sense, what we have here is we do have a very choppy corrective move, which it could be over right now. For all we know, we could consolidate here a little bit and then within the coming weeks, start seeing impulsive price action to the upside. That's very much possible. However, the other alternate is that we do take some time to essentially digest this correction. Maybe we see a bit of consolidation below what is our point of breakdown, which is going to be this region here. This again is the area from which we broke down from. We can very clearly see that we broke down from this zone. This was the start of the liquidation event. So inorganic price action. This move down is quite inorganic. And when it's inorganic, it tells me that it's likely that it won't act as significant of a resistance. So we may actually clear it a bit sooner, but it's possible that we form some sort of a consolidation structure here below that zone. It's also possible that we break above that zone, but we don't necessarily begin to impulse right away. And what I mean by that is basically we see more chop and sideways action like we've seen. And ultimately, as you guys very well know, as I say all the time, the longer the consolidation, the greater the expansion. So if we do get a scenario in which we simply chop about rather than continuing the impulsive price action, then the XRP BTC pairing may bleed lower, again, possibly down to the blue zone, which would be a real retest of the zone that we wicked into with this inorganic price action. That may be, by the time we get to this blue zone, that may give us an indication of when we're ready to begin impulsing. And what I mean by that is we could see a slow bleed down about 40% against Bitcoin. And this would not be because XRP USD is going lower than $1.90. XRP USD could simply be going sideways while Bitcoin rises another 30 to 40%. And again, I want to emphasize, we know that Bitcoin itself is on the verge of experiencing a parabolic advance and a parabolic blow off top. Do not discount the aggressiveness with which Bitcoin can move up in these moments. I've been here for 7 or 8 years. I've seen so many times where Bitcoin is printing impulsive price action and will move up $10, $20, $30,000 to the upside with alts barely budging, right? Alts simply treading water, going sideways while Bitcoin moves up tens of thousands of dollars. And again, we know, as we know, when Bitcoin is approaching that moment where it's going to go parabolic, and some may even argue that it's in the process right now of going parabolic, but when we get that final leg, or as we approach that final blow off top, price action gets simply more aggressive, more aggressive, more aggressive until we peak. And so in a scenario in which Bitcoin does kick off from these regions in a very aggressive manner, it does not take much for us to move up $20,000 to $30,000 or 20 to 30% with something like XRP going sideways. And that is all it will take. Okay, it doesn't mean XRP is going below $2 again. It simply means XRP could go sideways while Bitcoin accelerates. And that is all it will take. A Bitcoin move to 130 to 140K, which when I say it after what we just experienced sounds kind of hard to imagine, but don't forget that we went up from 74K to 112K in a matter of 1 month, okay? So, and again, we're gonna get more aggressive than that as we move forward. So if we could do what was essentially a $35,000 move in a month, then for all we know, Bitcoin could be at 150K within 4 weeks, okay? And in such a scenario where Bitcoin moves up so aggressively, right? We're talking about $30,000 to $40,000 in less than a month. All it would look like on XRP for XRP BTC to make its way down to the blue zone here, all it would look like on XRP is some chop like this, okay? That's it. So if XRP does this while Bitcoin moves up $30,000 to $40,000, then guess what? We find ourselves on XRP BTC in the blue zone. And that is all I'm saying is that it's possible that happens. It doesn't mean that it's bad or that it's negative or that XRP is weak. What it does mean is that when XRP does hit the zone and then begins its move to the upside again for another impulsive movement like we saw here, it'll be just as aggressive, if not more aggressive, and we're going to see our next major move on XRP that will likely take us to $5 plus, but could take us up to $10. And so it's just a matter of having a little bit of patience if we do need to wait for this sort of a move back down to this area of interest. Now that's one scenario. The alternate scenario is that Gandalf's grave, aka the key level right here, actually holds as support, right? Actually holds where we're testing it now. And in that case, we may move up to this primary target faster or sooner, okay? We have a lot of untapped liquidity above us. It is a matter of time before we take this liquidity. In fact, with the recent price action, we have even more liquidity resting above us. This will get taken. It's not a matter of if, it's a matter of when. So either we're going to take it after Bitcoin makes the next leg up, in which case we may get a bleed down to this area here, or we may take it sooner, in which case we may find a bottom. We may find some support here on the green line or around this area and start moving up aggressively, okay? And if that's the case and we start moving up aggressively, the minimum move that we're looking for is the 50% move up against Bitcoin. And again, we know that Bitcoin is quite bullish here, so we're not expecting Bitcoin to fall much lower, right? Again, we know it can technically go back down, but we're not going below 75K. which means that a 50% move up against Bitcoin, if XRP BTC is going to go the more aggressive route and move up from these levels rather than from the blue levels, it would imply that XRP USD, again, does something like this. Again, a 50% move would take us up to new all-time highs. So it would imply that we could see something like this. XRP grinds up, breaks through red, and we start impulsing to the upside sooner rather than later. Or we don't see as much consolidation here before a real breakout, or we come up to the highs and maybe we chop around a bit more before breaking out, right? So it all depends on timing and whether or not Bitcoin kicks off the next leg before XRP or vice versa. We don't know. Either way, if we do see a bleed down in XRP BTC to the blue zone, it is nothing to be concerned about. And I'm telling you that now because I know that if we do get that, XRP haters that get all excited and say XRP fully retraced its move once again, XRP BTC is bleeding back to the lows because it has no value, all the same nonsense we've been hearing for the past 5 years, right? All you need to know is that if this scenario does play out where we do move back down to the blue zone, well, if you're not fully loaded on XRP, that is when you should get fully loaded. And if you are fully loaded on XRP, then get excited when that happens because it means that we're on the precipice or on the brink of another major move on XRP against the US dollar. So that, I hope, sheds some light on possible scenarios here in XRP. Again, we will get further confirmation that the next move has started when we see impulsive price action. And sometimes it's easier to tell when we're seeing an impulse than other times, right? Here in XRP, it was very easy to tell very quickly that we were seeing impulsive price action because we got very clear, nice subwave divisions. And I do recall even seeing this on lower time frames because I was looking for an impulsive move and thinking we may have started that impulse. And then very quickly and aggressively we moved up. And at this point, it became very clear that we were seeing impulsive price action. In the same way, sometimes it's very easy and obvious to tell that we're seeing impulsive price action. Sometimes it's not as clear, but at the end of the day, that's what we look for in lower time frames to indicate whether the next move up is one that really has legs or whether it's part of more consolidation, more chop. So keep an eye out on these lower time frames to hopefully identify an impulsive move. And then you want to keep an eye out on the $2.70 to $3.11 region as an area of resistance. Clearing that, whether in an impulsive or a corrective move, in general is a good sign. Obviously, if we clear it in an impulsive manner, that's even better. And if we clear it in a corrective manner, it could just imply a little bit more chop before we actually see the impulsive movement to the upside. But either way, that is XRP USD and that is XRP BTC. Ultimately, still one of the cleanest, most bullish looking high time frame charts on XRP USD in the entire space. Very excited to see this at double digits down the road. Now we'll go on to XRP Ethereum because, again, this is a chart that I've talked about and that I've been quite bullish on. And I want to talk about, again, the same way. We have two scenarios here on XRP Ethereum to consider as well. And guys, I want to add, sometimes it's very obvious that we have one valid scenario that's going to play out. Sometimes I'm very confident in saying that I think the bottom is in, we've started our next impulse, we're going up. Sometimes we have two scenarios that may play out. We don't always have clarity in the markets. A lot of times we don't, more often than not, I would say we don't. And sometimes we are able to identify maybe one, two, or sometimes even three scenarios that we think are viable. Any scenario that I talk about here isn't just a scenario that I'm throwing out because it's possible. Otherwise, I'd be sharing you guys 10 different scenarios. There's plenty of possibilities. The scenarios that I show you guys are ones that I think are viable, or ones that I think are higher probability scenarios and are equally strong arguments to be made for both. And that's why I share them. I don't share anything in terms of scenarios that I think is possible but unlikely, or I'm just sharing to cover my bases. Anything that I share with you guys, I think, has a very real possibility of playing out. And the reason that I share them is I want you guys to consider more than just one outlook on a market, because part of being in these markets and part of trading these markets is having that flexibility to understand that there's not always a one outcome possible in these markets. And so with that being said, let's take a look at the XRP Ethereum chart. You guys will recall that I had this giant range drawn out. We actually talked about this reclaim back here in November. We talked about an expectation for a move to the range highs, which we got, which was a massive 200+% move to the upside. Beautiful, beautiful move. We then talked about how it's likely we see a rejection at the range highs, which we got once again. We then talked about an area of interest on the downside, which we may correct to, which was the mid-range, which we got once again. And from here, I said it's possible that we now see a reversal as depicted with this blue squiggle that we have here. So one scenario obviously is that we are going to reverse off of this area of demand and we're going to continue up from here. Again, this jives well with the scenario in which XRP USD takes off sooner rather than later, okay? However, in the scenario where XRP Bitcoin bleeds down to the blue zone, where XRP USD consolidates here a bit longer before we're ready to take off, in that scenario, XRP Ethereum might drift lower, okay? And where would it drift? Again, the same way we talk about those areas of demand or those ranges where we have the strongest levels of support. For XRP Ethereum on the chart, that would be this zone here. And what would cause such a drift? Let's see. A move down of about 25%. What did we talk about at the start of this video? We talked about Ethereum USD. What did we say about Ethereum USD? That it's likely that we have at least one more leg to the upside minimum. How big would that leg to the upside minimum be from current levels? Probably about 25%. That takes us just over prior all-time highs at $5,000, puts us at about $5,300, okay? The reason I'm tying this in together with the XRP Ethereum chart is because just like we talked about how if Bitcoin moves up and XRP stays stagnant, we see a drop in the XRP Bitcoin pairing. If Ethereum moves up against USD, which we expect right now, as we know, and XRP stays stagnant, meaning moves sideways against USD, then we get a similar drop in the XRP Ethereum pairing. To where? To our high time frame area of demand, or a similar region here, which would be equivalent to the XRP Bitcoin region in blue over here. Again, a move down to this zone would not be unrealistic to expect, and again, would be very bullish if we get it. Downside is limited, and then we'll look for a reversal here to head much, much higher. And again, this could simply be because Ethereum has one more leg above 5K before a larger correction. That leg above 5K on Ethereum could send this pairing down to the green zone, and then as Ethereum corrects and XRP begins its next impulsive leg up, that's when we see again the move up to new all-time highs. The reason that I like this is because if we get this, it gives us, without a surprise, an idea of when to start paying attention to XRP USD again. It tells us that, hey, if you're not fully loaded up on XRP, it might be a good idea to start loading up because this might be your last chance to get on board. It tells us when we may be seeing good trade opportunities come in XRP USD. It tells us when we may be seeing a good risk reward opportunity for long trades on XRP USD. All of that because this is the optimal place for us to see reversal, the strongest, most significant level of demand where we must hold a higher time frame, higher low, which is expected if we are to continue being as bullish as we are, which we should be. And so another thing that I'll point out is that I did share a chart on Twitter as well with this orange circle pointing out that when we initially hit this zone here, we did print a higher time frame bullish divergence on the 3-day chart. You can see it printed here. And we expected a move up. We got that move up, but it wasn't as strong as I would have liked. And now RSI has fallen back down to these lower levels. Okay, so this divergence played out. It gave us a rather lackluster 15% pump to the upside. And then we retraced fully on price and we retraced fully back down on RSI. This bullish divergence has now done its job. It is now played out and is now no longer relevant. And the fact that we've returned back to this area of support, in fact, made a little bit of a lower low, tells us that we didn't get the reaction off of this area of support that we would have liked to have seen. We would have expected more strength if this was going to be a full reversal. It kind of makes me think it increases the odds that we will see this higher time frame zone sooner or later. And again, that jives well with XRP kind of going sideways for a little bit longer while Ethereum makes one more leg up above 5K. That's all it will take for us to bleed down to this zone. And I welcome that opportunity, guys. I don't mind if XRP USD consolidates a little bit longer, takes a little bit longer to get going, if it means that it gives me more time to load up or more time to prepare for a long entry on XRP. I will happily take that. It also means, of course, that we get a more explosive move to the upside when it happens, because we know the longer the consolidation, the greater the expansion. Okay, so another thing we'll do is we can go down to the bullish divergence on the 3-day chart. We can continue to look for divergences to play out here on higher time frames. You can see we don't have anything on the weekly, no bullish divergence on the weekly, no bullish divergence on the 3-day. Some will point out that RSI is making a lower low here, and over here we have price making a lower low while RSI is technically made a higher low. And this is what we look for in bullish divergences. But there's a couple of things that you have to keep in mind here, and that is that these types of divergences are most significant and relevant when both data points at these lows are in oversold territory, meaning both data points are underneath the blue zone. And you can see here for the last bullish divergence that we got, which was valid, we had both data points down here. And this is more significant. When you have RSI up here, it still has room to fall. And if it does fall further, it'll probably invalidate this potential bullish divergence. So the other thing is that there's an argument that some traders will make. And again, there's no particular rule book to this. You just learn these things through experience and over time, and each trader has a different perspective or outlook on these things. But RSI, this line here is measured taking into consideration the last 14 candles. For this reason, when people see 2 points of RSI that they're trying to compare for a divergence, if these 2 points are more than 14 candles apart, they will disregard it. Okay, so if we look at the 3-day chart here, we can see that this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 candles apart between this low and the low that we're comparing. 17 candles is more than 14, therefore a lot of people wouldn't even consider this, and myself too, I don't quite consider this a valid bullish divergence. But you'll get people that'll point out these divergences, quote unquote, with a big gap in between the lows, and you'll have issues like where both the points aren't in oversold territory or they're more than 14 candles apart. All these things weaken the argument for this being a valid divergence. And so sometimes people will point these giant divergences out. Like, for example, I see this quite a lot. I see someone taking these lows here and then going like this and being like, bullish divergence. It doesn't even work here because these 2 points, you have RSI making a higher low, but price making a higher low as well, which isn't a divergence. But in situations where you have price bleeding lower, for example, you'll have people that'll take these giant gaps in price action and call this a bullish or a bearish divergence. I don't consider that valid for a number of reasons. You want to look at immediate points next to each other that form relative lower highs or higher lows or whatever. And ideally, for a classic divergence, you want both those points to be in oversold territory. So what we could look for, guys, what I'm getting at is the divergence here played out. We got a bounce, lackluster, didn't hold. We're now making lower lows. It's quite likely we visit the higher time frame zone, about 25% lower. Again, that could just mean that Ethereum pops while XRP stays stagnant. But what we could look for here now is when we get into this green zone, you could look for a fresh divergence to form here. RSI comes down, puts in an initial low, comes up, puts in a higher low underneath the blue here, which is anything sub 30 RSI, does that while price does this, just like we got right here, obviously in a smaller version, but something like this inside this zone, that could be another valid divergence to look out for a full-on reversal to the upside. So just keep that in mind on XRP Ethereum. All right, guys, so that is XRP covered, not just from the USD perspective, but from the Bitcoin perspective and from the Ethereum perspective. Bottom line, XRP USD remains one of the most bullish looking charts in this entire space. We may take a little bit longer to consolidate, while potentially Bitcoin and likely Ethereum make another leg to the upside, but that just means that XRP is going to kick off even harder shortly after. So don't be phased if XRP isn't the first one out of the gates and we do drift a bit lower on both the Bitcoin and the Ethereum pairings. All right, guys, let's now move on to TRAC or Origin Trail as my next alt of interest. Now, this one is going to be a little bit more simple to analyze. We're not going to be spending as much time on it because it doesn't need that much time. We're simply going to analyze it against a USD pairing. That's all that's really relevant right now. And the only reason I'm including this is because the chart looks absolutely freaking fantastic. And I think we're getting ready for a massive move to the upside. And this might be the last chance to load up on TRAC before we see new all-time highs on this coin. And that's why I want to highlight it in this video. So it's not one that I normally cover. I haven't covered it for a while in prior videos. Why? Because for the most part, it has been an accumulation zone and there hasn't been much to update about it, right? It's been relatively, I'm not going to say weak because that gives the wrong perception. It's been consolidating for a long time now. Was in our accumulation zone back in June, and I tweeted about it back in June as a good buy opportunity at 29 cents. Popped up from there, went to 59, bled back down into the accumulation zone, back under 30 cents, and this is where I tweeted about it again very recently. It's now trading at 63 cents. And more importantly, of course, with the high time frame chart looking absolutely gorgeous, more importantly, in the event that we saw 48 hours ago with a massive liquidation flush that knocked out and that wiped out thousands of altcoins, literally thousands, and you'll know more about that if you watch my last YouTube video. Origin Trail only fell 15% during that entire event. And again, guys, I want to emphasize that event that we just saw a couple of days ago. If you didn't watch my last YouTube video, we had on a basket of 1,500 alts, the average drawdown on 1,500 alts was over 65%. The worst 10 saw 85% declines, 85% to 100% declines on the worst 10%. So 150 alts dropped down 85% or more in that event. The other 1,350 alts in that basket dropped an average of over 65%. Doge, top 10 crypto coin by market cap. XRP, a top 5 crypto coin by market cap, both dropped over 50% in a matter of minutes. During that entire episode, TRAC, Origin Trail, dropped 15% only. Why did TRAC only drop 15% when the rest of the market absolutely nuked? The reason is because TRAC is not available to long on leverage or margin on any exchange, which means there was no massive liquidation flush because there was no one who has bought it on leverage or margin. Every buyer of TRAC, every single person holding TRAC right now is holding the coin in spot. They are not holding it on leverage. They're not holding it on margin. There's no way for them to be liquidated unless they physically go and click sell for whatever reason. That's the only way that they get out of their positions. No one can force them to sell their tokens. And that, I know, frankly, is why we didn't drop anywhere near what the rest of the market did. Not only that, though, not only did we only drop 50% when the rest of the market absolutely cratered, TRAC was one of the first coins to recover from the crash. Shortly after the crash, it was backed up to levels that it was at before the crash and made new local highs shortly after. In fact, as I tweeted recently, after the crash, TRAC was one of the best performing assets in the entire crypto space. Of the top 500 largest coins in this space by market cap, TRAC was the #1 best performing asset with an 80+% gain in the 24 hours following the massive market crash that we saw. A tremendous amount of relative strength. And I do think that this is the start of a 5-wave impulsive move to the upside on Origin Trail. And in my last YouTube video, for those who watched it, you will recall that I pointed out this zone in green as the buy the dip zone. You can see since I recorded that video, we came down very close to it, saw a little bit of a bounce, came down very close to it, saw a little bit of a bounce. We could still technically push into that zone, okay? If I was trying to trade this coin on an exchange with leverage or margin, this would be an A+ crystal clear long setup that I would take. As we know, I can't trade this coin on leverage or margin, so I can't take this setup on my trading account. But if I were to, this would be the setup. I would enter in the green zone, invalidation would be lows at 40 cents, and I'd be targeting significantly higher. Now, obviously, we can't trade this coin on leverage or margin, so we can't trade it from that perspective on a typical trading account. But what you can do is you can buy this coin directly, and you can technically take this trade if you want by buying the coin directly and setting a stop loss here at 40 cents on the exchange that you buy it on. And you can technically take this trade, but at these levels and zooming out, this is the type of coin that I would not be setting stop losses on, because I personally hold this coin until new all-time highs or zero, whatever comes first. And I don't expect zero to come, because I've done my research on this coin and I think it has very strong fundamentals. I don't want to spend too much time talking about that here because we have a lot to cover in this video, but I posted about it on Twitter. Very, very strong fundamentals. Very, very briefly, zero inflation. This coin is non-inflationary, has no inflation. Fully circulating, which means no new coins are coming into the market from VC unlocks, from airdrops, from staking inflation. Nothing like that exists on this coin. It's fully circulating and has been for some years now. And finally, it generates real revenue. Generated $5 million last year, or the last 365 days. All those funds were passed on to those that stake this coin. You can stake this coin and earn the yield. 100% of the yield that's generated by this token, they have a service that they provide, and real customers use this service and pay for it to the tune of $5 million of profit over the last year. All of that money gets paid out to those that are running the nodes to keep the network secure, as well as those that are staking their TRAC coin. They earn 100% of that revenue. The average APR for the last 30 days was about 8% yield on average. Some nodes earned anywhere from 18 to 20%. Some nodes earned 2 to 3%. The average across all the nodes for every single TRAC that you stake was around 8% APR, which is not bad considering this APR is pure profit that's generated by the protocol. It is not coming from token inflation or unlocks, okay? So with that being said, if I'm right, then it means and implies that we won't see below 40 cents, that this was the start of a much larger 5-wave move to the upside. If we just measure the size of this initial wave 1 here, that is a move from 40 cents up to about 80 cents. That's a 40-cent move. We expect the third wave to be multiples of that, and we expect the fifth wave to be similar in size. So I think this could certainly be a start of a much larger move to around $2 here, which is a quick 4x, okay? Ultimately, whether we get to $2 now or later in the coming weeks, ultimately, I think TRAC is headed to new all-time highs, like many coins in this space will be by the time this cycle ends and Bitcoin tops. And so ultimately, we're looking for a move above 385. As I explained a little bit in my last YouTube video, TRAC is a coin that, again, has had no inflation for multiple years now, which means there has been no increase in circulating supply for multiple years, which also means that through all of this time that it's spent at these lows, you have individuals like myself that have spent time accumulating this coin. And I've tweeted about it when I have accumulated, when I have bought it. It's been in this accumulation zone, some a little bit higher as well. But those that have accumulated this coin, like me, are not interested. I personally am not interested in selling anytime soon. When price does move up, people want to buy the token. There's no new coins coming into circulation that make it easy for them to buy. You don't have people farming the coin and selling it in the markets. You don't have people farming the coin and dumping it for yield. And so if people want to buy the coin, where are they going to have to buy it from? Someone who already owns it, which means that the float is very low and price should move up very aggressively when things kick into gear. For some context, while the high here is $3.82, Origin Trail was listed on Coinbase back here in 2021 of November, and it did spike to above $6. The reason that we had such a big spike again was because there has been no new inflation on this coin since 2018, which means that, again, the float is low, and so when demand does come rushing in, price moves up very, very aggressively. So there's no doubt in my mind we'll ultimately see double digits on this coin, which from current levels is a 20x, okay? So 20x by the end of the cycle, in my opinion. But even in the short term, I think this is the start of possibly a move to $2, which is a 4x. and possibly significantly higher, which is why I wanted to include it in this video, because I do think that this might be the last opportunity to get TRAC at a price under $1. If I'm right, then we will not see sub 40 cents again. Okay, if I'm wrong, then we'll see sub 40 cents again. But if that happens, we just end up where? Back in the high time frame accumulation zone, which again is the best place to be a buyer. And if you miss that zone already, even though I tweeted about it a few times back when you were in the zone, if you missed that zone, then this would be your next best opportunity here at just around 60 cents to get in and catch the ride that I think is coming very soon. So yeah, I envision this is going to start soon. And again, we could see this subwave 2. It may have already been complete. Maybe we dip deeper into the zone for it to complete, or maybe we get a corrective push up, a bit more chop, and then accelerate. It could happen in a number of ways. Either way, long story short, I think a very explosive move here is coming on TRAC, and it is one of my personal spot holdings as well. That's it for TRAC, guys. Let us now move on to HBAR. All right, guys. So on HBAR USD, again, we have that same issue where we have that big wick, and this is actually pretty cool. So I haven't messed with this chart in a while. The levels that you see here marked off are levels that I marked off in one of my prior videos or one of my prior updates. I think it was the last video that I talked about. And I highlighted the green zone a long time ago. I talked about this being the ultimate accumulation zone. We moved up to the red zone. I talked about how we could see something like this, where we come back down to green and we go back up to red and we just chop around. And then we get a very explosive move much later. And you can see here that even in the massive liquidation event that we saw, where did we wick into? The green zone. Where do we bounce off of? The green zone. So if you were lucky, you got some bids filled here if you had them set earlier. Business as usual. Nothing to worry about on an HBAR. It's consolidating and coiling and getting ready for a massive move that will blow us past 56 cents. And again, I said by my targets of $2 to $5 that I've been talking about for years now. Nothing has changed. Those targets have always been for a post-Bitcoin cycle top somewhere above 100K. We're now approaching the point where we are seeing Bitcoin above 100K, not quite at the cycle top part yet, but on our way there. And so there's no doubt in my mind that those targets will be met. And I've talked about how when I made those targets of $2 to $5, this was done years ago. When I made those targets, the inflation, the tokenomics were a bit different. The circulating supply of Adara was a lot lower, and now it's a lot higher. And those estimations that I had of $2 to $5 were based in part on market cap levels. And so now that inflation is a lot more, those market cap levels have changed a bit. To err on the side of caution, aim for that lower range, aim for the $2 range rather than the $5 range. Of course, it doesn't mean $5 can't happen. It just means set your bar, your expectations a little bit lower, because inflation has occurred on this coin over the years, and there's a lot more supply now out there than there was before, which means the market cap will increase at a faster rate at a lower price. In any case, $2, very, very reasonable in my opinion. After consolidation this long for about 4 years, 5 years, I mean, it's going to be absolutely explosive. I'm excited. I'm excited for this. I see it coming. It's like I can see the writing on the wall like I have for years, and there's no doubt in my mind about HBAR. I'm just as confident as I was about it on day one, and nothing has changed. While we have the opportunity to accumulate HBAR at these levels, it's a no-brainer in my opinion, okay? So again, like the USD pairing, again, same situation as most. We can't really tell what's going on lower timeframes because we had this massive liquidation wick. It's possible that we simply chop sideways here for a bit longer, but we can also, again, look at the HBAR Bitcoin pairing to get a little bit more insight. Take a look at the HBAR Bitcoin pairing. This is pretty cool. I haven't touched this chart in a long time. I made this chart a long time ago. And I talked about how there's two scenarios that I'm looking at. One, a reversal off the blue zone here, and the second, reversal off the green zone here, which is, again, equivalent to the XRP BTC zone in green that we talked about, equivalent to the XRP Ethereum zone that we talked about, equivalent to all other high time frame zones in these coins that we talk about. This is the point of maximum financial opportunity. And you can see here again in the flash crash, when once again we wicked into the zone, we bounced. Why? Because the flash crash occurred. If anyone was going to buy this coin, HBAR, best level to buy it at was the green zone. So there were probably some bids set here, and so that's where the drop ended. Otherwise, it probably would have gone lower. And the same thing can be said here on HBAR Bitcoin. That's exactly where the drop ended, and the green zone could have gone lower. This wick, I can't tell you whether we should consider it a valid test of the green zone or not, right? It's very possible, again, HBAR treads water for a bit, which would not be surprising because, again, not all coins are going to move at the same time. Attention will be focused on Bitcoin as it goes parabolic. We could certainly see a bleed down to this zone, which is about a 40% move to the downside. Again, all that would mean is that HBAR USD kind of goes sideways or relatively sideways while Bitcoin moves up to 150K-ish on its parabolic advance. And then if HBAR then kicks into gear after that, then by that time HBAR could still be trading around the 20 cent region, but HBAR Bitcoin could be back down here in green. And again, this is again the same way that I wouldn't mind XRP BTC bleeding down to that zone. It applies here as well. I would love for us to see a bleed down to the zone because, again, it gives us more time to prepare for what would ultimately be a very, very aggressive move to the upside. It gives us more time to focus on other things while HBAR does its thing and chops around. And then if we hit these zones, we know, okay, now we need to once again focus on HBAR for potential trade opportunities. This might be the last chance we get to load up, do any last minute shopping that you want to do before HBAR ultimately goes on that killer rip to the upside. That should break us out of what is essentially is a 5-year range at this point, okay? So that's HBAR, very, very bullish. Nothing has changed. Just got to be patient and load up all you can. Not financial advice, of course, but just means that as long as we're down at these levels, I will continue to look for opportunities to buy. I have enough spot already, but hey, if I manage to make some money down the road on other coins and I'm looking for something else to buy and we're still down here at HBAR, I may add to that stack. So that's HBAR for you guys. Let's now move on to CRV. Okay, guys, so I've saved CRV for last, and for good reason. CRV is one of the most bullish looking charts from every perspective and every angle that we look at. So I'm going to talk about CRV today in this video against the USD pairing, against the Bitcoin pairing, and against the Ethereum pairing in respect to and in context of things that I've talked about in past videos. So if you guys watch all my YouTube videos, you will recognize the charts that I'm about to share. You'll recognize the significance of them. If you guys haven't been keeping up with my YouTube videos, this is a good reason why you should, because we talk about these things all the time and they're very relevant and they're all coming into play now. So let's go ahead and break down CRV on all three charts. So once again, starting with the USD pairing, just like everything else, we had a massive liquidation wick down to, in some cases, 17 cents. This took me out. I got liquidated on this wick. I did not expect us to see such a drastic drop, and stop losses are rendered ineffective. A complete wipeout, okay? Again, this is something that should not have happened if you were to look at the article that I shared at the beginning of this video or watch my last YouTube video. This was completely inorganic price action and it should never have occurred. And again, like I said in the last YouTube video, am I upset about it? Yes. Am I going to cry about it and think about what could have been and beat myself up about it? No, because like I explained in my last YouTube video, it was almost unavoidable for people to get liquidated in this scenario. Even if you practice risk management, you set your stop losses, you risked a minimal amount on the trade setup. Because of the events that transpired, your stop losses may not have triggered. You may have gotten wiped regardless of your stop loss. It was just bad all around. And at the end of the day, this crash affected, I don't know the exact numbers, but I would say a majority, easily a majority of those that actively trade with leverage and margin, which is any active real trader is typically using these features, because when used correctly, they actually help you prevent storing funds on exchanges that you don't need to. Basically, it's a way to mitigate risk for having your funds on a centralized exchange. So when used effectively, they are tools to mitigate risk. In this case, backfired and wiped everyone out. As I said in the last video, sometimes life throws curveballs at you. And like I said, the biggest loss I've taken in my 7 years in this space, since 2017. No one's going to bail us out. So all we can do is get back into it, work our butts off to make up for it. So with that being said, guys, let us take a look at CRV. And we saw this massive liquidation wick that essentially wiped out stop losses for traders that had stop losses under 49 cents, underneath these lows, underneath these lows, underneath these lows, underneath these lows at 21 cents, which was a really brutal one because for all intents and purposes, those lows should have been safe. Okay, now where is liquidity resting? Yeah, you guessed it, it's resting above us. So the chart is ready to make the move up. Now, this likely was the event that marked our bottom. I know it marked our bottom, but likely an event that set us up finally to take all these untapped highs and finally make that move to $2-3 that we've been expecting for such a long time. This is probably going to kick us into gear to make that move. And what excites me about CRV, and you can see here again, like on the hourly, no hourly closes below 46 cents. And even on Coinbase, which is on a non-leveraged exchange, CRV didn't go below 46 cents, right? That's still a pretty deep correction, but it's nothing near as ridiculous and insane as the correction in the 17 cents that we saw, right? In fact, this chart, some of you may remember it, is my high time frame chart that I shared not too long ago on Twitter, on X, I guess. And it's our monthly zone that I said I expect to hold, right? So we expect the zone to hold on a monthly closing basis, which means in 17 days and 19 hours, I expect that we will be trading above 49 cents. That means that this zone held, and we'll be looking for the move to the upside. In fact, in 17 days and 19 hours, we very well may be above the green zone, trading at above 75 cents. It would not surprise me at all with what I'm about to show you guys. But the point is that on the high time frames, looks good and looks healthy, okay? Going back to our chart here, the point of breakdown, just like I showed with you guys on XRP, is right here between 63 to 80 cents. So if we get above this, that's the first nice sign of strength. And you can actually already see on lower time frames, where did we reject on this rally? We rejected in the supply zone, the point of breakdown. I'll make this red. So this is the key level. I'm gonna delete this because it's not as relevant anymore. This is the relevant area of resistance, which as you can see on lower time frames, you already rejected at. So we may be coming down to grab some liquidity, maybe below these lows. Maybe we hold this cluster actually and continue up depending on how bullish we are. In any case, when we get above red, that's actually going to be a very good sign. While we already know what the CRV chart looks like, I want to share something that I saw on Twitter that I thought is quite important and relevant. It's going to kind of put things in perspective on this USD chart. So this is a chart that I saw on Twitter. I want to show you this post because it kind of puts things into perspective. CRV 5-year logarithmic range. We'd already deviated below the range. Low in 2024 came back inside the range, printed a 7x. We just swept the low and are returning inside the range again as we speak. I wonder how many X it will print now. Applies the same logic as CVX. We haven't touched range highs in over 4 years. Order books are thin. Only the 2 diamond hands remain. Any weekly candle close above 23 cents is a higher low. We want this weekly candle to close above 50 cents to show strength. If it closes above 70 cents, we can call it Hercules instead of curve. There's a good chance the next target is the range highs at $6.80. What I want you guys to take away from this, which is something that I've talked about in the past, is that CRV has essentially been in a range since inception. And I talked about this in my tweet. CRV has essentially been in a massive range for its entire existence. It has never had pure impulsive PA, has never seen pure impulsive momentum, primarily because shortly after its launch in 2021, Bitcoin saw a mid-cycle top right around here where we topped on CRV as well, at 65K, right after completing its major third wave, which we now know was a completion of a third wave, and entered a massive correction phase from 65K down to 15K, which we call our fourth wave, prior to the fifth wave, which we're in now, where Bitcoin is now above 100K. And this correction, the fourth subwave, which was very drastic and deep because of Luna collapse and FTX, took everything, including CRV, down with it. CRV has yet to show its strongest momentum. This can be validated by looking at high time frame RSI on CRV. It has never in its existence had monthly RSI above 55. Yet, despite this lack of high time frame momentum, CRV managed to climb to $6 plus. When you look at it from this perspective, it is almost obvious that CRV will hit double digits in a post-Bitcoin cycle top environment. What I'm emphasizing here is that this is a range. We talk about impulsive price action, we talk about trending price action. We have yet to see that on CRV. And a testament to this is that impulsive price action, by its very nature, has strong momentum. You can get impulses on lower time frames, you can get impulses on higher time frames, okay? If we take a look at a chart like Bitcoin, and we zoom out to the higher time frames, and we look at the higher time frame impulses on Bitcoin, and we know that impulsive movements have momentum behind them. This can also be validated by looking at RSI. How do we know that? Because RSI is, by its very definition, a measure of momentum. So if we know impulsive moves have strong momentum, and we know that RSI, by its very definition, is a measure of momentum, then it all goes to say that when we're seeing impulsive movements, we have increases in RSI. And the strongest levels of momentum on RSI are levels that are above 70 RSI. We call this the overbought zone. It's a bit of a misnomer because overbought, some people tend to think means that a correction is looming. But as I've shared in another YouTube video, which the link will pop up here in a second, be sure to check it out if you haven't already. It's very short, but it gets to the point about RSI. When RSI is in these quote unquote overbought territories, that is when momentum is the most bullish. Okay, so if you look at RSI as a scale of 0 to 100, 100 being the most bullish momentum, 0 being the most bearish momentum, RSI is above 70, it indicates we're seeing periods of the most bullish momentum. And you can actually even just map this out. Anytime RSI breaks above 70 on the monthly time frame, that is when we see our biggest moves on price. Okay. And I'm going to go ahead and show you guys that here. We're going to match the monthly RSI being above 70 to price action and see what we get. And you can see that every time this has happened, it's essentially our parabolic moves on Bitcoin. And again, this chart is in log scale, so you're not quite seeing the significance of these moves. But if I go like this, you can now see a lot better how these are parabolic moves every time. Every time RSI goes above 70 on higher time frames. Okay, and this is the monthly chart, but this applies to every time frame. So if you have RSI above 70 on the daily, it means that we're seeing expansion on the daily and high momentum on the daily chart. If you have RSI on overbought levels on the weekly, it means we're seeing expansion on the weekly chart and high momentum on that time frame. But obviously the biggest, most relevant time frame for crypto, in my opinion, is the monthly chart. And so when we see RSI breaking above 70 on the monthly chart, that is when we get the most significant moves of expansion on Bitcoin. For example, the first time we saw it, Bitcoin went from $900 to $20,000, a 20x increase. The next time we saw it, Bitcoin went from $12,000 to $60,000, a 5x increase. The next time we saw it, Bitcoin went from $40,000 to $75,000, a $35,000 increase, again in a matter of 2 months. The next time that we saw it, Bitcoin went from $60,000 to $110,000, or a $50,000 move in a number of months. So anytime you get this RSI, that's how you can basically identify. It confirms essentially that we're seeing impulsive price action, and it confirms that we're seeing the strongest moves. And if we're not at these levels yet, it tells us that we haven't yet seen the strongest moves. So with that being in mind, let's go back to CRV with this context in mind And let's take a look at what we have. Folks, here is CRV on the monthly time frame. Okay, and this is complete price history of CRV, including its launch in 2020. Again, I always tell people you ignore these first few candles because there was a botched launch. These are one of those anomalies that we will disregard. For all intents and purposes, CRV launched in here in 2020, and the low was at 30 cents. The high was at $6.90. But what do you guys see about RSI here in the monthly time frame? You will see that RSI has never been higher on CRV on the monthly time frame than 55 RSI. 55 RSI, and despite RSI never hitting overbought territory, never being in the most bullish territory at 70 plus, we managed to climb to $6. Okay. Today, we are still below that level, but we are getting close to breaching it. And when we get RSI at 70 and above, the move that we saw in CRV that took us from 50 cents or $1 to $6 is going to look like nothing. Okay. It's going to look like an appetizer in a 4-course meal. This move, guys, when we get above 70 RSI on CRV, of course, we'll already probably be at $2 or $3 by the time we get there, maybe even higher. That is when we will see the strongest moves on CRV. That is when we will see the most momentum on CRV. And that is when I think we will be well on our way to double digits on CRV. There is no doubt in my mind, again, unless something absolutely catastrophic happens with a protocol, that CRV will see double digits and that we have yet to see the strongest, most aggressive moves of this token. And what we see here at 683, again, as evidenced by the lack of momentum on higher time frames, despite it being a relatively strong move, will pale in comparison to what we are yet to see towards the end of this cycle. Okay. And so we can go down to lower time frames like the weekly even, and we can see that there has been a time in history where CRV has gone into overbought territory on the weekly. And what time was that? That was when we rallied from 20 cents to $1.30 for a 6x. And that was, again, coinciding with RSI on CRV entering overbought territory above 70 on the weekly chart. That is the highest time frame chart on which we've entered overbought territory, the weekly. We've never even entered it on the 3-weekly chart, and we've never entered it on the monthly chart. So the highest time frames have never experienced that type of momentum that we see during the most aggressive expansions in the crypto markets. With that being said, guys, obviously you can tell I'm very bullish on CRV. And if you've been following me for any period of time, you probably already know that. But this should hopefully reinforce my conviction in where we're headed on CRV, and hopefully yours as well. Again, guys, at the end of the day, your decision to buy or invest in these tokens is completely on you. I do not offer financial advice. Don't take my words as an assumption that I can somehow see the future. I cannot see the future. These are just my perspective and my opinions based on my experience in these markets for the last 8 years and the knowledge that I've gained from that. But for all intents and purposes, guys, the best is yet to come on CRV. And this move from 21 cents to 132, that looked fantastic and that was fantastic, was really just a small precursor to what we're going to experience here in the coming months. So moving on from CRV USD, we've identified the key area on lower timeframes that we want to see broken above. If we do break above that, the next target is the highest here at 137. And more importantly, the first major area of supply and resistance is going to be here at $2 up to around $3, okay? When we clear that, we're looking at 6+. But what I really want to focus on here on CRV is relative strength against XRP and against Ethereum. We've talked about Ethereum and XRP extensively here in this video already. We know that we're very bullish on both. Ethereum potentially making a move before XRP, all things considered. XRP probably making a move after that, but a more aggressive move and a more violent move to the upside. Unless, of course, we're seeing Ethereum in scenario 1, which I described, in which case Ethereum might be ready to take off itself. But for all intents and purposes, we know that those two assets look quite bullish in general, right? So what do we see when we look at CRV Ethereum or CRV XRP, which I've compared it to in the past? Let's take a look at CRV XRP first, okay? CRV XRP has now hit my area of interest on the downside. So here's a chart that I shared on September 30th. And you can see here that I said not too much has changed on the CRV XRP chart. Still going sideways here and continue to expect CRV to outperform unless we fail to make a higher low here in the green zone. And we had equal lows here. We're looking for a sweep of those equal lows into the green zone before aggressive expansion to the upside. Someone asked me right here, perfect. What is the thought behind comparing XRP to CRV, Ethereum, or ENA, or other DeFi would make more sense to me? Is XRP somehow related to CRV more than Ethereum is? Basically asking, why are you using this comparison? And so I responded, I think this is important to keep in mind. XRP is the most primed high time frame chart out there, right? We know that XRP made a massive impulse up 50 cents, and we know that it's been consolidating for about a year above those levels, above $2. and we're getting ready for the next major move to the upside. CRV is also one that is primed, but has been weaker than XRP for a long time. We know that by the bleed on the CRV XRP chart. Comparing the two, because for the first time in a long time, it looks like CRV may have made a bottom against XRP. We talked about how we had high time frame bullish divergences, which is what these blue lines denote. And from there, we got a reversal to the upside. So for the first time in a long time, we have a break in lower time frame. We have a reversal based off of these high time frame divergences. It signals that this might be the first significant break to the upside and potential reversal off of these lows. Because XRP looks so strong in high time frame, this is relevant and significant to CRV, right? If we know that XRP is probably going to outperform against most of the market, and we think that CRV may have bottomed against XRP for the first time in a long time, it implies that CRV may be even more explosive than XRP. And with XRP being a leader, CRV may be extremely explosive to the upside against USD. And that's why this chart is relevant. With that being said, we were looking for us to take these equal lows into this area of demand. And now we're looking for a reversal in this zone and a move up to the highs. This would coincide with CRV rocketing to the upside while XRP remains relatively stagnant. We go to our chart here and we can see with the events that took place over the last 48 hours, we moved down into the zone. Again, we can disregard the wick, and if we just look at the candle closes, we can see that we had no hourly candle closes below the green zone, just here at around 0.19, and we've now bounced off of it, okay? So if we're gonna hold a higher low in this green zone, and this was our bottom, then, and we're getting ready for that expansion to the upside, which would be just to the range highs, 136% move, but to the first major area of resistance, which is this red zone, a 200+% move, then it could imply that CRV is getting ready to take off to that $2 zone while XRP remains relatively stagnant, okay? In other words, the impulse or the aggressive move on CRV could be happening a lot sooner than most may be expecting, okay? And again, this sort of move on CRV XRP of a 200% rise to the upside to hit the next area of resistance, it's very similar to the move on XRP Ethereum that we had back here that I actually pointed out prior to a 200% rise. Most people did not see this coming. They didn't understand why I was comparing these charts. They didn't think it made any sense. And I pointed out this reclaim and this deviation. I said we're targeting these highs expected to happen aggressively, and what followed was a 290% move of XRP against Ethereum. What we're seeing here on the CRV XRP chart could be the brink of something very, very similar to that move there with the 200+% move to the upside. And that's why this is relevant. And that's what gets me excited is now we've taken these lows, we moved into this zone, which means that we might be at that point where it's time to pay attention. Like I've been saying, when we hit these key levels on any chart, it gives us an idea of when it makes sense to expect the next big move. And we might be on the brink of it, guys. Now, this is CRV XRP, but I've also compared CRV to Ethereum as well. And so let's take a look at the CRV Ethereum chart. The CRV Ethereum chart has also hit my area of interest. And this is a chart that I also shared on Twitter. We'll take a look at that as well. And in this post, I talked about why I believe CRV along with XRP will soon begin to outperform against Ethereum. And I broke down the logic behind that. And one of the things that I pointed out was that CRV Ethereum has retraced most of this move, is back at the origin of the initial breakout, expecting reversal in either the orange or green zones, which we're just now testing. And so following up from this chart here that I shared, we can see that we've now tested the green zone. We're bouncing off of it now. So again, assuming that we're going to put in a higher low here, we can't expect to fall much further lower, which means that we may be on the brink of that aggressive expansion to the upside, similar to what we have on XRP. And so again, if we know that Ethereum has one more leg up before a potential pause, right? One more leg up above 5K before a potential larger correction or at least some consolidation. And we know that XRP may be trading water for a little bit as Bitcoin accelerates. What this implies is that while Ethereum may move before XRP moves, CRV may move before or in tandem with both, but at a much more aggressive rate possibly. And again, zooming out on the higher time frames, if this is a bottom forming here on the CRV Ethereum chart, we have much, much higher to go. And so the fact that we have confluence with the CRV XRP chart, the CRV USD chart, and now the CRV Ethereum chart, that makes me so much more bullish on CRV. We're at pivotal reversal points in all three charts, as opposed to just being at reversal point on the USD chart. The fact that we have this confluence with these other assets is a positive sign. And now we're going to take a look at the CRV BTC chart, because just like the other two guys, we did something that I always thought was possible. I wasn't sure if we were going to get it, but we got it. And this makes me, again, that much more excited about what's to come. CRV Bitcoin, guys. This is the CRV Bitcoin chart. And I've talked about on Twitter how even after getting the strong move to the upside, we did something that I don't like to see all the time. And I'll show you guys some tweets in which I talked about this, but essentially we had this range formed and we left behind this low, we left behind these lows, we left behind these lows, incrementally higher lows above these range lows. And on the weekly chart, we never tested this area of weekly demand. You can see this weekly candle prior to this very aggressive expansion that we last had that took us up 6x. We never actually retested that zone. You can see we fell just shy of it here and we made it marginally higher lows here. And so one of my concerns, I guess you can say, was always that the true expansion may not occur until we've retested this zone. I talk about this in some of my tweets about how these zones are kind of like open doors, and you feel more comfortable with price action moving up when these doors have been closed, meaning if we test these zones and fill up these inefficiencies or these gaps into these zones, then it means price action moving upwards is then more efficient and less likely to be retraced. And so we like to see these doors closed, meaning we like to see these zones retested to give us more confidence in the move up that follows. So when we came down here and we failed to clear these lows at the range lows and instead we pumped up, I was a little bit skeptical about the rise. And I'll show you some tweets where I talked about that. And I just said, be aware that, hey, it's possible that in the future we come back down to test this weekly demand. And again, that can happen in different ways. That can happen with Bitcoin going parabolic and CRV trading sideways. In this case, it can happen with a market-wide correction that sent CRV USD down to test this zone. But at the end of the day, this zone has now been tested. Again, ignoring the massive wick, we had a test of it on the hourly candle, and an hourly candle closed just above it. And so this zone has now been tested. The door has now been closed. And so any rises now from this level should be higher confidence rises. And hopefully now we're ready to go for these range highs, which coincidentally is a 200+% rise to the upside, which again coincides with our CRV XRP charts, which coincides with our CRV Ethereum charts, et cetera, which coincides with our CRV USD charts as well, because we're looking for a move to around $2, which from 50 cents is a 200+% move. So we have again confluence across a number of pairings. We are now at essentially the most pivotal point for a reversal, the most logical point for a reversal on higher time frames on the CRV USD chart, on the CRV XRP chart, on the CRV Ethereum chart, and now on the CRV Bitcoin chart. The confluence is fantastic, and this may finally tell us that we are finally ready for that aggressive expansion on CRV to $2 plus. After a long time, after being very patient, after enduring a lot, including some massive drawdowns and some significant liquidations, we might finally be ready to make our ascent to our first major target of the upside, which would be the first major leg in a much larger move that will ultimately take us again to range highs at above $6.80, and in my opinion, ultimately to double digits. So we are there, guys. This video was quite in-depth and I've covered a lot. I think I'm going to end it here, guys. If you enjoyed, please like, share, and subscribe. It keeps me making these videos. Comment in the comments below if you enjoyed this content, if you learned something from it. And I hope you guys enjoy the video, and I will see you guys in the next one.